In the words of the investment maestro Warren Buffett himself, price is what you pay, value is what you get. A simple yet powerful statement that encapsulates his investment philosophy, one that has guided him through his stellar career. But let's wind the clock back a bit. Omaha, Nebraska, the 30s, a young boy named Warren Buffett was born into an average middle-class family. Even at a young age, his fascination with numbers and figures was evident. He would spend hours reading books about finance and business, absorbing every nugget of knowledge he could find. Warren's humble beginnings were instrumental in shaping his frugal lifestyle and his conservative approach to money. His father, a stockbroker, ignited the spark of investment within him. Warren's first brush with investing wasn't in fancy stocks or bonds, but it was a simple investment in a pinball machine for a local barbershop. A small venture, but one that taught him the value of investment and returns. As he grew older, Warren's interest in the world of finance only intensified. He started developing what would later become known as his value investing strategy. A strategy that emphasizes investing in companies that appear underpriced by some form of fundamental analysis. He was just 11 when he made his first investment, buying 3 shares of City's Service, preferred for $38 each. Though the stock swiftly dropped to $27, he held on, selling only when it rebounded to $40. But then, it climbed even further, reaching $200 a share. This early experience taught him a valuable lesson about patience and the importance of long-term investment. Young Warren had no idea he was on the path to becoming one of the world's wealthiest and most respected investors. His journey was just beginning, and his experiences, both the triumphs and the setbacks, were shaping him into the man who would become known as the Oracle of Omaha. Warren Buffett didn't become a billionaire overnight. It was the result of consistent and smart investing. Now let's delve into the early stages of his financial journey, which gave birth to the empire we know today as Berkshire Hathaway. The story begins in the late 50s when Buffett, a young man with a sharp mind and an uncanny knack for numbers, formed Buffett Partnership Limited. This was his first foray into the world of professional investing. The partnership was a simple arrangement, pooling together money from family and friends, with Buffett making the investment decisions. Buffett's approach was unique and unconventional. Rather than chasing the hottest stocks of the day, he looked for undervalued companies with strong fundamentals, companies that were selling for less than their intrinsic value. He called these his cigar butts, tossed aside by others but with a few good puffs left in them. This approach, later known as value investing, was grounded in the teachings of his mentor, Benjamin Graham. By the mid-60s, Buffett was ready to make his most significant move. He started buying shares in a struggling textile company named Berkshire Hathaway. Despite its problems, Buffett saw potential. He eventually took control of the company, and though the textile business was eventually shut down, Berkshire Hathaway became the investment vehicle through which Buffett would build his empire. The story of Berkshire Hathaway is a testament to Buffett's investment philosophy. He focused on acquiring businesses with durable competitive advantages, run by competent management and available at a reasonable price. This approach has led to the acquisition of companies across various sectors, from insurance to railroads, and from candy manufacturing to furniture stores. Berkshire Hathaway's growth has been phenomenal. From a struggling textile company, it has morphed into a powerhouse conglomerate owning substantial stakes in some of the biggest companies in the world. But it all started with one man, one partnership, and a unique approach to investing. Warren Buffett was building an empire, one investment at a time. His story is a reminder that patience, discipline, and a keen eye for value are the hallmarks of successful investing. Remember, it's not about making quick bucks, it's about building wealth over time. Warren Buffett was building an empire, one investment at a time. Buffett once said, "A very low-cost index is going to beat a majority of the amateur-managed money or professionally managed money." These words echo the wisdom of one of the greatest investors of our time, Warren Buffett. They introduce us to a concept that may seem a bit abstract at first, but is actually quite simple and powerful: indexing. Indexing is a type of investment that involves buying shares of an entire stock market index, such as the S&P 500. instead of individual stocks. The main benefit of this approach is that it allows investors to diversify their holdings and reduce risk. Instead of trying to pick the next big winner, which is notoriously difficult, investors can simply ride the overall wave of the market. Buffett himself is a big advocate of indexing. He believes that most people, including many professionals, would be better off investing in low-cost index funds than trying to beat the market by picking individual stocks. This is because, over the long term, the market as a whole tends to outperform any individual stock. And by investing in an index fund, you're essentially betting on the entire market, not just one or two companies. So, how can the everyday investor make use of indexing in their investment strategy? Well, it's actually quite simple. You can start by setting aside a portion of your income each month to invest in an index fund. This can be as little as a few $100s a month or as much as you can afford. The key is to be consistent and patient. Over time, your investment will grow as the market grows, and you'll reap the benefits of compound interest. Of course, like any investment strategy, indexing is not without its risks. But by diversifying your holdings and investing for the long term, you can significantly reduce these risks and increase your chances of success. In the world of investing, sometimes the simplest strategies, like indexing, are the most effective. Warren Buffett once stated, "Do not save what is left after spending, but spend what is left after saving." Now, I want you to let that sink in. It's a simple yet profound statement that encapsulates the essence of Buffett's approach to saving and budgeting. And it's not just empty advice. This is the mantra that one of the world's wealthiest men lives by. Despite his immense wealth, Buffett is renowned for his frugal lifestyle. He's not one to splurge on lavish luxuries, but rather prioritizes his resources on what truly matters. The first lesson we can glean from Buffett is that saving isn't an afterthought, it's a priority. Before you even think about spending, set aside a portion of your income. This is the essence of paying yourself first. It's not about how much you earn, but how much you keep. But it's not just about saving, it's about budgeting too. Budgeting, in essence, is planning. It's about knowing where your money goes, and more importantly, deciding where it should go. It's about making conscious choices, rather than letting your money control you. So, how can you, the everyday investor, incorporate these principles into your financial plan? Start by setting a budget. Determine your income and expenses and ensure that you're not spending more than you earn. Allocate a portion of your income to savings before you even start spending. Make saving a habit, not a chore. As for budgeting, it's not about restriction, but about freedom. It's about making informed decisions about your money and not letting it slip through your fingers. It's about understanding your financial situation and making choices that align with your goals and values. In the grand scheme of things, remember that it's not about accumulating wealth for the sake of wealth. As Buffett himself puts it, price is what you pay, value is what you get. So invest in what brings you value, not just what costs the least. Remember, wealth isn't about having a lot of money, it's about having a lot of options. As Buffett once put it, someone's sitting in the shade today because someone planted a tree a long time ago. So, what tree did Warren Buffett plant? And who is sitting in its shade? Let's delve into the legacy left by this financial titan. Warren Buffett, the Oracle of Omaha, started with nothing more than a dream and a few dollars to his name. He built an empire that has not only stood the test of time, but has also consistently outperformed the market. His journey is one of calculated risk, unwavering discipline, and a steadfast belief in the power of long-term investing. His successes, from his early days at Berkshire Hathaway to his later triumphs in the world of finance, stand as testament to his unique approach to wealth building. But what sets Buffett apart is not just his incredible financial acumen, it's his philosophy, his outlook on life and money. He's always maintained that money is but a tool, a means to an end. It's not about accumulating wealth for the sake of it, but about using it wisely, investing it prudently, and sharing it generously. Buffett's impact on the investment world is immeasurable. His strategies, from his advocacy for index funds to his emphasis on saving and budgeting, have shaped the way millions approach their finances. He has demystified the world of investing, making it accessible to the everyday investor. And it's not just about the money. Buffett's legacy extends to his philanthropic efforts, his commitment to give away the majority of his wealth to charitable causes. He has inspired others to do the same, sparking a wave of philanthropy among the world's wealthiest individuals. So what can we learn from Warren Buffett? That investing isn't about quick wins or short-term gains. It's about patience, discipline, and a long-term vision. It's about understanding the value of money not just as a currency but as a tool for change. And it's about the power of giving, of using one's wealth to make a positive impact on the world. Warren Buffett, the man, the myth, the legend, continues to be a beacon of wisdom in the world of finance.